If you don't use a trade manager for MT5, I highly recommend looking into it. I was struggling placing lots, the risk, but this trade manager makes it so easy. Pretty much it lets you have like a set risk, and then you could also fix the risk to reward. Like if I wanted to do a buy order at 0.5%, move like the stop loss and the TP. And once it looks good, click open buy. It just makes placing orders easier on MT5. Definitely recommend checking it out. I'll leave a link in the description. Not affiliate, just think it's really helpful. Recommend trying out the free version first before buying it. Personally, I ended up buying it because I don't want to trade without it. Jumping into the dashboard, I placed one trade this week on Thursday, and that trade won $204.03, as you can see here. Just going over the objectives quickly. For this first part of the challenge, profit target of $2,000. Our daily loss is $1,000, which means that the most I could lose in a day is $1,000, and our max loss reached is $2,000. So the whole challenge, I can only lose $2,000. There's a minimum of 3 trading days, and here you can see helpful information like your balance, equity, etc. So now going into the trade that I took this week, this is how I charted it in TradingView on the Forex.com chart. For the analysis, I'm going to use the Awanda chart just because it's cleaner and it'll probably be easier to follow along. Switching over to Awanda, use the bar replay tool so you can see what I saw coming into the market. Looking at the more recent price action on the daily chart, see that price has been bullish with higher highs and higher lows. Zooming out a bit, we also see that price took all this liquidity above these swing highs. Because price has been bullish recently with strong bullish momentum and it recently took all this liquidity, I did feel that price could pull back before continuing the overall bullish trend. If price were to continue the overall bullish trend, a target that I would have based on the market maker model would be this. So this would be the daily level I target based on the market maker buy model. So with that narrative in mind, I wanted to see an area where price could pull back to and fair value gap here. While this is the external draw that I believe price will target in the future, more immediate target would be here on the daily. Just because it'll probably be a while until price hits top one here. To recap, price has been bullish recently, especially with this strong bullish momentum. We see that price has taken the liquidity above these swing highs. So price could be due for a pullback. Could see this daily fair value gap as a potential area where price could pull back to before continuing the overall bullish trend to take this daily level and potentially this daily level. So that's the narrative I had in my head on the daily. So really focusing in on this here, thought price would do this. That in mind, I was looking for a move that was in line with that narrative. Dropping to the 15-minute and zooming out, this is the daily fair value gap that I marked out. Just looking, I did see a lot of liquidity that price could take. So all these lows here, that made me more confident that price was probably going to come and take this liquidity before coming higher. And so I was waiting for some type of move like that. And so the price forward. Okay. So this is pretty much what I saw when my session started, and zooming out, we see that price still hasn't taken the liquidity here. So my bias was bearish until price touched the daily fair value gap. Once price touched the fair value gap, my bias could possibly switch to bullish because there could be a reaction at this fair value gap to push price higher. So just looking, there was a breaker here and pretty much like a flip zone. And then I was looking, noticed fair value gap here. So this is based on the ICT unicorn. Pretty much use breaker block and fair value gap overlaps to identify higher probability areas where price could react. But we do see that there was an overlap here on the 15 minutes. And just zooming out to the 30-minute, yeah, see we have a 30-minute fair value gap over here, which is bigger than the 15-minute one. And then this one, the 30-minute, take these two candles here. So I don't know if it's technically a breaker, but there's even more of an overlap. It's an area where I felt price could react to. Because I had short-term bearish bias, I was looking for a market structure shift on the 5-minute and 3-minute. And so I was waiting, and then here. So price never shifted. So I never took this trade. I was looking to go bearish in this area. Looking here on the 5-minute, I was waiting for a market structure shift. So when I saw this okay. Oh man. All right. So when I saw this price take this liquidity within the overlap of the 30-minute fair value gap and the breaker, after I was waiting for a market structure shift to potentially go bearish. So this was actually the trade idea that I had initially, but as you can see, price just took off. So I didn't take this. Something I did notice was that there was SMT divergence, which I could mark out. That's not what I... 4? Was it 4? I could have sworn there was SMT. Was it the 30-minute? I don't know, man. That thing just disappeared. Here we go. Also, SMT divergence, as you can see here on the 15-minute chart, was at 11:15 on Wednesday. This is at 3 o'clock on Thursday, coming to $1. You can see this was at 11:15, and then this was at 3. So I guess the trade idea for this, let me zoom out a bit. As a recap, my bias was bearish until price touched this daily fair value gap. With that, it did see this breaker here and then an overlap with a 30-minute fair value gap. It made this an area that I was looking to possibly take a sell from. We also saw that liquidity was taken into this area. I wanted to see market structure shift and it was not, so this was not a trade for me. But other confluences, this SMT divergence and the news. The forecast for the news was bearish for the euro dollar. So I guess those things combined, SMT divergence, bearish forecast for the news, and marking out this high probability area with liquidity here to take and this higher time frame for value gap could have been confluences for this trade, but it doesn't fit my strategy. There was no market structure shift, so I didn't take it. Then, as you can see, price did hit the fair value gap, so my bias changed to bullish. And so I was waiting to see how price delivered. I did want to see market structure shift, so I was waiting and it starts to become bullish. So now dropping down to the 3-minute, we see here that price took liquidity, followed by a market structure shift, and then price left behind a fair value gap here. The 3-minute fair value gap left behind. I trade look like this, pretty much. Yeah, because I believe it was a 1 to 8.2 board source trade. Look at the original. Yeah, this is actually how it ended up playing out.